learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, but we have so many things to talk about. One, the stock market's still going insane. Two, natural gas is about to go crazy, and I got a little bit of a narrative and even a gamble to talk about. And then speaking of gambles, number three, the meme stocks and where the market's at right now. It is getting absolutely crazy. So we got a lot to talk about. I'm actually going to do things a little different. I'm going to give you the keys in like bullet point format so you could understand it, and just let me know what you think. Give me some feedback, Chad, and then we're going to talk about the minutes, what will be bullish or bearish tomorrow. Again, do not forget, you have a big catalyst, Fed minutes tomorrow, 11 a.m. Pacific, 2 p.m. Eastern. That could be a big market driver, but I'm going to give the breakdown, what we can expect, or at least how to respond depending on what comes out. And then I'm going to go over the plays, and like yesterday, I want to give you a play. I'm going to give you the strike price, but it's not a play that I'm in. I'm going to talk about one that I haven't got, and we're going to watch it. That NFE went crazy yesterday, so we'll keep seeing. So, Chad, I hope you're ready for this. Yeah, we're going to talk about natural gas too, but it's going to be crazy. Tomorrow is an event. The market is at a crazy level, and here's just a fun fact, taking a look at where the market is, but if you don't know, the difference from 370 to 430 is the same exact difference from 430 to 480, meaning we are right in the middle, ladies and gentlemen. So I hope you're ready, but drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. And if you put /live, you will find us live throughout the trading day. Yes, it's free 99, baby. First link. We will see you there. But now, let's get into the keys. Tell me what you think of this. This is how we're starting. Number one, we open up the morning with positive, or AKA not as bad, Walmart and HD earnings. Then we got news about a China tech crackdown. Pretty much Tencent was forced to sell off part of their food delivery unit. But again, that wasn't good. Atlanta GDP, they cut the forecast for that. And then you had more bad German data, as well as natural gas jumping. Literally, natural gas in Europe popped. So we're going to talk about that when we get into the plays. And then throughout the day, or like right before open and then leading into the first hour or so, you had the new build real estate data that collapsed. The permits showed some signs of hope, and then industrial production throughout the day, that was actually good. But for the most part, we really got off to a wobbly footing, but a lot of people were taking that relief from Walmart and HD earnings as positive. But then there was that, and then as we were opening up through the day, tech started to go down. There was like this mini rotation into staples and defensives, and then all of a sudden the meme stocks, aka the long duration unprofitable tech companies, they started going crazy after Bed Bath & Beyond hit 50%. It was mind-blowing. Literally, the market was doing its own thing, Bed Bath & Beyond was ripping, and then Bed Bath & Beyond, it just broke free and started going crazy. But after it hit 50%, it woke up AMC, it woke up GameStop, literally even BlackBerry, KSS, even BNG. Oh, I'm telling you, it was crazy. What was there? Express, FAZE. Oh, there was another one, bro. I'm telling you, it was crazy. But then that sparked the whole entire market. Literally, everything followed along from it, only for it to suddenly drop 4 points right when we hit the 200-day moving average. So that's like the whole breakdown. That is what we got today, but it was absolutely wild. There was no other news except the stuff in the morning, again, with China earnings and all of that. And now coming into the minutes, that's what people are going to be looking at. But today was a wild day between the levels. You had reaction at the 200-day moving average. We went above the 400 level. The meme stocks got involved. I'm telling you, it was absolutely nuts. So now coming into the minutes tomorrow, what would be a bullish minutes? And again, to even give you a recap, the minutes are delayed. These are from last meeting. A lot of things have happened. A lot of things have priced in. So even with the other Fed, for the most part, like the base case for a lot of people is that, well, we shouldn't learn too much from the minutes. That way, if you do learn more than what we got from the last meeting and the minutes actually present new information, that will cause a big reaction. So watch out for that. Otherwise, realize there is little factors that will make things more bullish or less bullish. So the bullish part, if you hear any talk / agreement of them slowing down on rate hikes or them having kind of a discussion about slowing down or even stopping, anything that echoes the dovishness from Powell's unscripted remark, that will cause a bullish reaction. Pretty much if there's nothing new and it's more in line and leaves the door open for ambiguity, for them to pull back in the market to keep running with this narrative, that will be bullish. Now on the bearish side, what would equate to a bearish minutes? They would be anything that just had no indication of slowing down, no plan on going crazy, or them pretty much saying, hey, we're not even looking at it now. Or if the minutes say what Neil Kashkari said and just something about raising rates even despite the conditions getting worse, that will be bearish. Or remember what they said about one or two Fed meetings ago. They said markets are still at elevated levels. So you'll see where the market was back then. It was a lot lower than where it's now. But if they say a comment towards that, that would be very bearish. But now, on the contrary, if they say that the 380, 360, 370 level is where they think was appropriate, that could actually end up very, very bullish. But overall, we do not know what's going to happen. And this is what we've been saying with all the data. It is all about knowing how to respond. Once you get it, you could still make moves. So keep all of this in mind. And we said it, no matter what we've seen already, if there's anything bullish that supports this narrative, you can rip a lot higher. And then vice versa, if anything could really, really sour it and it's coming from the minutes and maybe from Powell and can move the Fed futures and all of that, then it definitely can start bringing things down. So I hope you're ready, but let us get into the plays. So right off the bat, I got 3 different plays for you. I have plays on all of them, but the last one, I'm going to show you a double dip, and that is the one with the strike price I want to go over. But number one, I got to go over oil, man. Natural gas is going crazy. I did not want to do this. If you literally watch yesterday's watch list, I said, listen, I want to hold natural gas, but I don't want to grab more. The premiums are too crazy. And then we wake up this morning. What happens? UNG gets to a 14-year high. But why? It's the same thing we've talked about. TTF, shout out that call, baby. That's the Europe natural gas. It went crazy and it broke out. Literally, here is the chart. It already came down a little, but this thing was already at 260. It's literally the highest it has ever been in history. So I was saying, hey, man, if that's going to break out, maybe I could go for a gamble. And that's what I did. I went with the debit spread, and hopefully you see how this kind of follows in line. I didn't want to play it because the premiums are juice, but if premiums are juice, I could utilize the debit spreads, and that's why I did it on oil. So this one is a gamble, and I'm telling you now, the momentum is there. We're going to see how it plays out, but if I miss it this week, I wouldn't be surprised to see it next week. And now, with the whole narrative that we're talking about, you notice gas is going down, like literally crude oil, but natural gas is going up. This could be a shift we might see here, where we go from gas to oil, and then you watch natural gas go crazy as if it's crude, and then crude kind of chills out and trades like natural gas, maybe until we get a flip-flop, and we are starting to get here into winter. But that's why I did this play. As far as the actual play now, I did go a little bit bigger, and again, August 19th, it is very, very risky, so I may have to even get another one. Hopefully, the volatility will allow me to get more time, and I still have that other UNG. We're going to talk about that. We got another 1,000%, but I grabbed the Boyle August 19th, 130 calls, and then I shorted the 140 calls, and it cost me about 55 cents a pop, and I bought 10 of them, so I spent $500. Pretty big play. Like I'm saying, it's a gamble. If these go crazy, I've liked some of the natural gas ones this year, so we'll see how it plays out. It went up a little bit, and it does have a pretty nice max return of like $1,000 a contract, but I think natural gas would have to go crazy, so we'll see how this breaks out and where it goes from there. But that is the first play. I really like it. Now, number 2, in honor of the meme stocks, I did a play on FAZE, and I want to show you something with it, but / insert your favorite meme stock here. It doesn't matter what you play. I know some people might disagree. Some people might like some of their companies a little better. And obviously, there is going to be differences. And if there is other news that is like really material, then yeah, it will separate them from the pack. But with all this volatility, the market going up, do you believe the rally or not? Meme stocks going crazy. All I'm saying is that none of the plays matter on the hype meme ones. It's all about how you play it. That's what I've been saying. So on any of these, I would be going with debit spreads. And this is what I want you to understand, why I keep saying that. And again, you could also just buy shares and buy puts to protect. Go about it however you want. But with the debit spread, just think about this. You saw this today as all the meme stocks started popping. What happens on the first couple of pops? Those out the monies, especially if it's an aggressive first pop, the way out the monies, they get jacked up. So when those get jacked up, what you do is you short those while buying the ones a little bit up that are closer to the money, because now when it starts to chill out, you'll notice the ones out of the money will just get totally faded, but the ones closer to the money, they will hold up a little bit better. And really, that's what we did here with the FAZE play. So I did end up going down a little bit on them. I paid a decent amount, but I grabbed October FAZE 22.5 calls. I grabbed 5 of them, and then I shorted the $30 calls. So 22.5 to 30, that's like what, $7.5 max reward per contract, but it cost me $50 per play. Got 5 of them, $250. But now what I want you to see is look at the 22 contract. That's more closer to the money. But when I sold the further out the money 30s, which are almost like 10 bucks out the money, those got decayed a little bit more. But this is what we did with the BBBY, and this is what I'm saying, debit spreads for the win. I sold out of this play. We bought it about a week and a half ago. I brought the same exact thing up when we first started seeing the meme hedge. Remember that? And we sold out of those for 500% today. $40 into 200. It accounted for everything. Even at one point, we got in the money on the contract, and the stock went barely above the one we sold. But I sold out before that. It came down, and you even saw we really got to maximize that play. But with any of these, take advantage of the debit spreads if you're going to be going them. And overall, just be careful. None of this is a recommendation, but that's the second one. And then finally, number 3, baby. Here is the play, ARLP. So coal is a silent sleeper. If UNG goes crazy, if we see Europe kind of deteriorate a little bit with this whole gas energy drama, a lot of people have been looking at coal, and it's quite simple. Look at ARLP. Go look at some coal stocks. You can't ignore the companies that have not reacted to anything this last couple of months, and that's what I'm showing you right here. Not only has it maintained, it's starting to go up. It's like reacting in its own little way there. The plays that I have are up 200%. So this is what I'm saying. I'm not touching those. I want to get more because of what I'm seeing here with natural gas and their performance. But now my dilemma is these premiums are up. I'm holding plays that I've held from the beginning of the year that are literally up 200% still. So what I'm looking at is the January 35 calls on ARLP. I have the 30s. Those are up, but I could notice those 35s are lagging a little bit. So what I'm looking for is pretty much another big run on ARLP and those to not move, or if ARLP goes down a little bit and those get cheap, those could be good. Or if it really goes crazy tomorrow and it's like, oh man, there's premium, but I really like to play, and we see gas go crazy, you could use a debit spread, knock off half the premium, and now you're like slightly higher than where I got the first calls, but then you're not paying the premium that we got. It kind of puts you in the middle, but watch out for those. I like coal plays. I like where it's at, and that's a contract on the chain that stuck out to me that I want to buy, but I'm not in it yet, and really, I just want to make sure I can maximize and get the price before doing it, and in the meantime, I'll just ride out the other plays. But those were the main plays. As far as everything else, like I told you guys, we took a little bit of profits today. We got rid of those BBBYs, made them free yesterday, got another couple $100 today. Totally golden. I loved it. And then I rolled into the FAZE, so we'll see. And then I took profits on the UNG. If you remember, we bought the bottom literally right here. I bought these at $1.50. I bought 10 of them, and we sold them out throughout the way. Again, I've been holding on. I had 2 more left. I sold 1 out of 2. I wanted to realize 1,000% right there, so we closed out of that for $1,000. Still got 1 remaining. And then I went for a Netflix next week 275 call at like 67 cents. And why I bought it, because remember I sold the 270 yesterday. I got 100. I paid 50 for it last week, and now after the volatility there in the morning, they were cheap. I was like, well, I could get pretty much the same strike for the same price I paid with an extra week. Let's run it again. Let's see what happens and go from there. Even if I lose on it, we'll still pretty much break even of what we would have been last week. So we'll see what happens. But those were the main plays. That was pretty much it. Again, minutes are going to be the main focus. We'll see how data comes in, but really the market's kind of been ignoring it, and really it's coming down to now the levels, and if energy, bonds, and dollar, if one of them can make a big move and kind of start leading the sales here, that might point everything. Otherwise, it's up to Powell and the Fed, so I hope you're ready. But That is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember to stay peaceful, baby. I need you to remember to relax. Imagine how all of this year is played out, and right now you are in the middle, the same distance from the bottom to the same distance from the top. Just use this moment to relax a little bit, and maybe you can find the things to laugh at, how we freak out sometimes and get overexcited. Find your balance. But Chad, you've been prepared for this. All the people holding it down, God bless you. We're in the game. This is our moment. We gotta be patient, but like I said, I think we're ready for it, baby. So Chad, I love you. Drink that water. Stay hydrated. Stay healthy. Make sure you get those long terms as well too. That Chad loves you. We're praying for you, and God bless America, and God bless the Colt, baby. I'm trying my hardest right now not to pump it up right. You know what I'm saying? I'm trying to, because I'm focused. Oh, you remember the inflation? Don't stop. Okay, I'll come. I don't want to scare you. It's intimidating. Okay, I love you. Goodbye.